What up, what up, what up, what up, Crypto Warriors? It's Sergeant Crypto back at it again. Here to discuss this article I found from Forbes. JPMorgan has issued a dramatic warning over Bitcoin markets. So today is Saturday, December 22nd, 2018. I'm going to discuss why I think this is all smoke and mirrors and why they're trying to trick people into keeping up their Ponzi scheme, the stock market. All right, so let's get into it. Let's take a quick look at the markets real fast. So everything is in the green, pretty much, right? Over the past 7 days, we just had a crazy run up. Bitcoin Cash is up over 100%. We have Bitcoin Cash SV up, over 50%. The real winner here in the top 20 is Decentraland, and I wanted to grab a bag of those too, but fiat couldn't come into the market in time. But if you have some Decentraland, you're winning, and I hope you're taking some profits right now. That's pretty much it. So let's get into this article real quick, real quick. This is my second time recording this, by the way, folks. I just deleted the whole recording from before. Crazy. So I'm just going to read the highlights here. Participation by financial institutions in Bitcoin trading appears to be faded, JPMorgan analyst wrote in a research note to clients. It was first reported by Bloomberg, a newswire. Key flow metrics in future markets and in average volumes have downshifted dramatically. The Bitcoin price peaked in December last year, 20 grand, blah, 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 blah. November, hard fork, this, that, and the third. So he's talking about, the hard fork from Bitcoin Cash, which itself was a fork from original Bitcoin, caused panic to sweep the market and led to a rapid decline in Bitcoin price. Other cryptocurrencies continue to suffer disproportionately during this correction phase. The bank's analysts added, prices have declined to a point where mining is becoming uneconomical for some miners who have responded by turning off their mining rigs. So yeah, he's hitting a few good points here and there. The whole Bitcoin Cash fork and Bitcoin miners shutting off their mining rigs and all that stuff, right? However, it is false to state that institutional investors aren't interested anymore, because although he stated that, even in this article, it's, here it is. In October, Fidelity Investment, which administers more than $7.2 trillion in client assets, unveiled standalone company called Fidelity Digital Asset Services to handle custody, the safe storage of digital assets for Bitcoin and other cryptocurrencies, and will execute trades on multiple exchanges for institutional investors. So there, I'm going to show you evidence here of other stock exchanges. We have the Jamaican Stock Exchange that should go live by the end of this year. All right, so within a few weeks, I guess we should be hearing something about that within a couple of days from now, I guess, right? We have a German stock exchange. They'll be going live with a zero-fee crypto exchange by early 2019. We have Bakkt. Okay, so with all these different stock exchanges coming into the market, for this analyst to say that institutional investors aren't interested, and not that I care for institutional investors to come into our space, right? Because I don't need someone to have custody of my private keys. I can hold those myself, and you should as well. All right, hashtag where are the keys or something like that, right? I'm going to do a video on that soon. All right, so yeah, not that I care for institutional investors to come into the space, but this is a blatant lie again from JPMorgan. All right, and here's an article from last year, all right, September 16, 2017. After the boss calls Bitcoin a fraud, JPMorgan buys the dips. Just recently, news.bitcoin.com reported on JPMorgan executive JB Diamond calling Bitcoin a fraud and claiming he would fire any employee from his firm who traded the digital currency for being stupid. Now it seems JPMorgan has been caught red-handed purchasing a bunch of XBT shares, otherwise known as exchange traded notes, that track the price of Bitcoin. So last year they did this to the market. You know, he came out, said it was a fraud, called it all types of names, and then boom, they were secretly trading it, right? And here we go again, the same type of BS, saying that no, really institutional investors aren't interested. Now, the reason why I think they are saying these things is for people to keep up their Ponzi scheme, the stock market, with their QEs, their quantitative easing, and their stock buybacks and things of that nature. Because guess what's happening in the stock market right now? We're having a major sell-off. All right, and I think what they're trying to do is, they are manipulating the market, right? By saying that, oh, institutional investors aren't interested in crypto, so basically keep your money in the stock market or buy up more of the stock market, I guess, to pump it, right? Because I think what's happening here is going to be what's called a dead cat bounce, right? Where it's going to bounce off, go right back up, and then what they're doing is they're going to be shorting the hell out of the market. They're going to be shorting the hell out of the regular stock market and making money that way, because things are going to go way lower than it is right now. And this is just my opinion, all right? Again, not financial advice, just my opinion. The great thing about crypto, and I'm going to go off on a tangent here, the great thing about crypto is, for me at least, it has allowed me to do a lot of research into our financial system and the way how it really works, and going into that rabbit hole, man, of our financial system, and wanted to learn more about, our finances, because of what Bitcoin was really invested for. All right, and when Bitcoin came out, if you know the history and all that stuff. So this is why I think, just from doing my own research, that they're shorting the regular stock market, trying to keep their clients and the regular folks, everyday traders, in the regular stock market, to keep them in, to prop it up some more, get that dead cat bounce so they could short the shit out of it, and then boom, make some money on that end. All right, because we can see all the evidence right here. I mean, why else would they write that participation by financial institution in Bitcoin trading appears to be fading? Like, why else would they write that if they're not going to be shorting the regular stock market, because they're trying to keep people in it? And we can see from these different articles here that stock exchanges worldwide are getting involved in crypto. All right, let me know what you guys think. Let's have a discussion in the comment section below, and let me know what you guys think about, my crazy tinfoil hat ideas, man. All right, it's been your boy, Sergeant Crypto. Thanks for watching. Please smash that like, hit that subscribe button, and notification bell to get notified when I upload new videos. Peace.